All right, guys, video number 3 in the 3-part mini-series about what it takes to buy a house. The third topic is income. For me, personally, this was the hardest thing about qualifying for a home. And I've noticed through the years that it's the hardest thing for a lot of young people. A lot of my friends and young clients really struggle with the income part of their loan approval because lenders are extremely picky about what they will actually classify as real income. So they won't most likely qualify your side hustle as an income. If you get paid under the table, they most likely won't classify that as income. If you have a new business, even if it's profitable, and even if you're reporting the income on your tax returns, they're most likely not going to qualify it as income. Lenders want to see 2 years of income history most often, and that also typically means 2 years employed at the same employer or at least in the same industry. They also want to see tax returns and corresponding bank statements. So for me as a business owner, I had many years of income, but I was a sole proprietor. I was depositing checks into my personal checking account. And because I wasn't claiming enough on my tax returns, because I had an excessive amount of write-offs as a new business owner starting my business, I didn't have enough on my tax returns to qualify. So what I ended up needing to do is use a bank statement program to where the lender looked at my bank statements. They included my deposits and excluded all of my business expenses, but I'm paying the price for that because I'm paying a percentage on my interest rate that's at least 1.5% higher than the market rate for somebody that uses claimed tax return W-2 income. So it comes with a price. However, when it comes to income, just keep in mind, show your income if it's real income. You could write it off to save a couple bucks on taxes, but it'll most likely end up costing you more when it comes to the lost equity and the lost value of the home that you'd like to buy. Now, the second part of income is that lenders want to look at your net income, and by that I mean debt to income ratio. So you might make $20,000 a month at a W-2 and you've had the job for more than 2 years and your bank statements align with your pay stubs. However, if you've got a boat that you're financing, an RV that you're financing, a couple cars, a jet ski, or whatever the heck else, even if it's not bad debt, like maybe it's student loans, basically if it's showing up on your credit report as a monthly obligation that you owe, the lender is going to subtract that from your allowable income and only use what's left over. From what's left over, they're only going to allow you to use a percentage of that to qualify. So let's say you have that $20,000 income, but you've got $10,000 in debt that you owe every month on car payments, maybe other properties or student loans. With that $10,000 that's left over, that's your income, but that doesn't mean you qualify for a $10,000 mortgage. Hopefully you wouldn't even want that. It means that they might only approve you for 40 or 45% of your net income. So it's important to keep that in mind when you have plans to buy a house, but you're contemplating financing a car or buying something else that's gonna go on your credit report. In the most case scenario, just don't do that until you at least talk to a lender, not to mention preferably buy a house, and then you have the freedom to finance other things. So hope that helps with the income portion. At the end of the day, I'm speaking to you as a realtor and a homeowner, but I'm not speaking to you as a lender. So what I recommend is take your financial situation and provide it to a lender and let them give you the roadmap to your loan approval and ultimately home ownership. But aside from that, I still hope this gave you value and helped you guys. If it did, great. I would love to help you with your real estate goals. Even if you have some questions, feel free to just DM me and call me. I'm always just an outreach away. So thanks again for tuning in, guys. Always here to help.